I want to do some analysis on Palantir stock. Now, the reason that I want to do analysis on Palantir stock is a lot of people got hosed. A lot of people got hosed on earnings with Palantir. And I'm going to show you how you did not have to get hosed on earnings. And in fact, how you would have been in while the market was going up and out of the way in the process. So if that sounds good to you, let's go. Okay, so first, Palantir had earnings today, and it is currently down 11.63%. Now, these marks on the chart I actually put on here this morning on this morning's live stream, and I want to show you why. So my rule for trading around earnings is this: am I already profitable in the trade? That's my first question to myself. If I am, then does the expected move break the trend line that I'm following? So the question is, how do you calculate the expected move? So on this morning's live stream, I did that. So we're going to watch that together. I'm going to explain it, and now we get to see the aftermath of what happened during that time. So here's me from this morning wearing a nice Texas hat, maybe even 70% of that price. And the reason being is that at earnings, we don't know what's going to happen. As I mentioned earlier, you could see a 25% up move or a 40% down move, or honestly, you could have a 2% up move and a 0.25% down move. We don't know. So the market makers price these with this absolute maximum amount that they possibly can. And so by doing so, they're going to make sure that they cover their backsides if they're wrong. Okay. So if you bought the at the money straddle, that'd be $17.85, which looks like this, buying the at the money straddle. Now, because the market makers want to protect their backsides, they overinflate what the actual expected move is. So if it's 1785, what I do and what I was told and what I would learned was you take 0.85% of that. So 0.85. So 85% of the move, $15.17. Because like I said earlier, they are overinflating the options to really make sure that they don't get screwed as market makers. So you can tell about 85% of that is the rule of thumb for the expected move. So it's $15.85 up. So from here, $15.85 up and $15.85 down. Right about there. So when you look at this, right, the current price is the green line right there. The expected move is either up $15 or down $15, nearly $16 each way. So for me, if I'm following the 10 EMA, you can see that blue line right there. If I'm following the 10 EMA, it would absolutely break through that if the expected move did materialize. Now, could it be the expected move to the upside? Absolutely. But when you come from trading, you need to have a risk first mentality. Yes, it can go up $15.85, but it also can go down $15.85 or even more or less. And because of that risk, I'm not willing to take it. However, if I were following the 20 EMA, it actually would not break it. The 20 EMA is down here at 105. The bottom of this expected move is at 108. I actually would keep it on. I would keep it on because it was still $3 away on the expected move from taking out my trailing stop. Now, is that more of a risk? Yeah, for sure. But if I'm not going to exit until it goes under my trailing stop already, then it's a risk worth taking because I'm already profitable. And if it goes to here, then I'll get out. If it doesn't go to here, then I can ride it. All right. So thank you. Very handsome gentleman who is explaining how all that worked this morning. So we were looking at pricing out the 124 calls and puts at the money. So this morning, that was valued at, let's just go back in the video for a moment here to here. If I'm not good on the 20 blue 20, 15, because I got so 1785. That trade, the at the money straddle this morning was valued at $17.85. Now, here's the deal. Here's why I think trading straddles is so dumb. The price has gone down 13.5%. The price has gone down $14. And you thought you were clever by putting on this trade, right? Because it'll profit if you go down, it'll profit if you go up. No big deal. This is the smartest thing I've ever done in the history of time. Is probably what you're thinking to yourself. However, it's gone down 13% and you're losing money. You are still losing money. Right? You bought it for $17.85. The current price is $15.25. You are still losing money. even though you thought you were a genius, buying the at the money straddle, and even though it went down 13%, you still lost money. Isn't that crazy? Maybe I know what I'm talking about. Maybe I know what I'm talking about. I've only been doing this since 2009. Now, looking at this, one thing is that your put value increased quite a bit. Your call value basically has gone down to zero, basically nothing at this point. But it did not make enough money to offset how much it cost for that call, right? So you bought the call, you bought the put, it's gone down. So it's about right here in this diagram right here. You're still losing money. Oh, and it has to be profitable in 3 days. Yeah. This is a losing strategy. But we calculated the expected move at 5% of the move, $15.17. Now, looking at this, wow, look at that. Isn't this crazy? It's almost like I know what I'm talking about. The expected move went down. How much is it down? $14.50. Almost exactly. Almost exactly. Crazy. So now it could have gone up almost exactly, but the point is the expected move is baked into the options, and you know how to price it now. You know how to price it. So whenever the earnings come up next time, you can say, am I already profitable? Yeah, for sure. Does it break the trend line you're following? Well, if you're following the 10 EMA, the expected move would have done so. If you're following the 20 EMA, no, it wouldn't. It wouldn't. Now, don't you dare, because I know what you're thinking. I'm going to follow the 10 EMA until I get some pressure. And then when something like this happens, then I'll just follow the 20. No big deal. Do not do this. I know you're thinking this because I did it too. I'll follow the 10 EMA until something bad happens, and then I'll change my plan on the fly to follow the 20 EMA. Do not dare do this. Do not you even think about doing this. Because I'm telling you, that's what I would have done in my early years, for sure. Now, looking at this, where do we go from here? So first off, I would not have traded up into earnings, and this is why. Now, let's back the truck up and let's look at this holistically. I want to look at Palantir and Outlier. So if we zoom in, Palantir got a buy signal on April 25th. April 25th is right here. Come on. April 25th is right here. So first off, it was running up into an order block, which that concerns me. The order blocks now with this new script actually do stay on the screen, which is very handy, but order blocks work as support and resistance. When it crossed over and closed over it, that order block was then invalidated. But it did continue on. So first, I would not have traded this because it only had like a buck or so to run up into the order block. But let's say you didn't know about the order blocks and you were confident and you love the stock, right? You could have held it as it's going up. So next, we got the buy signal. You saw it was getting more greedy, less fearful. The sector getting less fearful, more greedy. All that looks really good. But then sector breadth, which is down here, that was another red flag right here. Because sector breadth, and let's actually look at it on the chart for sector breadth over here for the tech sector. We go the 10 EMA. My rule, and look how fast this goes. My rule is that when it goes up over 75, I'm interested in placing trades as it continues up. But once it peaks and starts coming back down, that's when I get out. Now, what is market breadth measuring? Market breadth is measuring how many stocks we have buy signals for. And when we're looking specifically on the tech sector, we're looking to see how many stocks had buy signals in the tech sector. That makes sense, right? If it was 100, every stock in the tech sector would have a buy signal. If it was 0, no stocks in the tech sector would have a buy signal. Everybody understands. Now, as we talked about earlier, the market cycle and how it's represented in market breadth. When you see it peak and then contract, when it goes over 75, you can consider that what's some people call overbought. Overbought, meaning all of the buyers have stepped in. Who's left to sell? I'm sorry, who's left to buy? Nobody. That's exactly what we saw right here. And you can see just how quickly the tech sector ran up, right? We went from extreme depression down here to hope, maybe even disbelief right here, and then super spike up to euphoria. Everybody realized, oh, wait a minute, we're back in a bull market. Buy everything. Okay. So now it peaked up at euphoria. And my rule, like I say, is once it peaks over 75 and then contracts, I'm out. I'm no longer putting on new trades. I'm going to let the market cycle repeat. I'm going to let it come back down and then start to go back up. And this went fast. It went really fast up. And now it's about to cross under the 10-period EMA of the market breadth measurement right here. By the way, I created this indicator, me personally. I'm very proud of it. But it measures something you cannot see on price alone. So it peaked on April 29th, meaning April 30th was the day to stop putting on trades. And we look over here, April 29th, April 30th was the day to stop putting on new trades. April 29th was right here. Now, looking at this, you're probably like, well, Chris, like I wouldn't have made all that much money, right? Let's say you went close to close, would have made 3%. 3% is a respectable return on a stock, right? But not good enough for me. I need more bigger money. So remove this. So let's say you held it, right? Let's say you held it a couple more days. You had warning before earnings happened, right? You could have run it all the way up from this buy signal all the way up to yesterday's close. How much would that have been? Right here, 9.87%. You had the warning, right? The market breadth was telling you something ain't right. In this sector, on the market breadth was telling you the same thing. Let's go to the market real quick. Actually, I like the all stocks, not just the S&P 500. Market breadth on the entire market, every stock we cover, told you the same thing. It peaked on April 29th, right? So we look at this situation, we're like, I had advanced warning in Palantir, but I didn't take it. I didn't take it. Now here's the other thing. You're probably saying, well, why didn't I have a sell signal, Chris? Well, because nobody can predict earnings. Nobody can predict earnings. So even though you had a tremendous run up right here, nobody can predict earnings. And even though back here, February 14th, before this last sell-off, right, February 14th was this date here. We got that sell signal. We still couldn't have predicted what was going to happen at earnings. So looking at this, right, we had a bullish trend. We had a buy signal, but we also had declining market breadth on the market, declining market breadth in the sector. Then coming into earnings, and we calculated the expected move. All of that to say, this is how you build a trading plan, right? This is how I would have built a trading plan around this. Does it mean it was the best one? No, but it does get you out of the way. It keeps risk first. This is the important part. This is the exact way how you can stay in the market when things are going against you. And you can get out of the way by trading risk first. So, JT, to your question, after the earnings announcement, Palantir dropped like a rock. Thus, price touched my stop price. Okay. Is there any order type to exit the existing option trade when price hits the stop price? If so, how the exit price of an option can be calculated and should it be entered during market hour? So there are certain brokers, I don't know which one because I don't do it. There are certain brokers that have really complex orders with options where if you hit a certain level on the price of the stock, it'll either execute a buy or sell for you on the option price. I don't do that at all because I don't do any sort of automatic orders. I want to be in charge of my orders. Okay. So for example, if your order was to sell, if it hit 105.72, which was around where the 20 EMA is at right now, I'm trying to show the black line, but when I get over it, it disappears. When it gets down to the black line right there, if that was where your stop order was hit and you got sold out, you got freaking hosed, right? Because now it's up $4 or $5 since that point. Dude, that sucks. I don't do anything automatically. And this is a great example of why. It may sound great on paper, but if you're watching your money, then I would not at all let the market gods wick me out of anything. Exactly. Women and children, get out of the way. Get out of the way. But Dot wants to look at the same thing for AMD. Let's do it right now. Let's look at this trading plan for AMD. First off, AMD should not be on anyone's radar because AMD is a hot garbage stock. Hot take of the day, AMD sucks. Hot take of the day, AMD will take your money and light it on fire. That's as good of an investment as what this. At least you get to enjoy the beautiful flames. Here you don't get to enjoy anything. You just get to see your money evaporate. Okay? AMD is a hot garbage dumpster fire. But it could go back up, right? It could go up, right? It should go up from here, right? Point is, we do have our 10 over the 20. Prices, not quite over the 50. Maybe. But we have earnings after the close today. So let's run through this again. Let's run through this again. Is the trade already profitable? Most likely not. Most likely not. Looking at this, most likely not. But let's say hypothetically, you were the one person who bought the bottom and AMD is going up from here. Okay, second question. Does the expected move on AMD, does that break my trend line? So let's go measure out the expected move. Deep thought. Only fools break the rules. All right. So if we're looking at AMD, now the way we price out the expected move is to take the closest option expiration to earnings. And then we go at the money. So it's currently at 99.73. At the money is going to be your 100 strike. You would price out buying a call and buying a put. It's going to show up down here with a limit price of $8.10. Okay, $8.10. We then take out our handy dandy calculator. Yes, AMD is a monkey donkey. Very good. And we go $8.10, right? $8.10. And we multiply that by 85%. I didn't do that right. Let's try that again. 810 times 0.85. So $6.65 up, $6.88. 688 up or 688 down. So let's go measure that. So 688 up. Now, this is not percentages. This is dollars, but it's pretty close to percentages, just the way that it goes. And 688 down. About right there. Now, looking at this expected move right here, and if you were following any sort of trailing stop moving average, I think you're hosed. I think you're hosed. I mean, AMD going back down to a $93 stock or potentially up as high as a $106 stock. Keep in mind that it was a $150, $180, $200 stock not all that long ago. So looking at AMD at the moment, this is what we see. Now, let's go look over here in Outlier, get some perspective. Get some perspective here. Let's zoom in. Does have the buy signal that came in on April 28th. So let's see when that happened. April 28th. Dude, I'm telling you, you could have made a couple bucks on that buy signal. Up 3.56%. That's probably the only 3.56% AMD has gone up ever in the history of time, it looks like. Point is, it's still sitting on a buy signal. We can all agree to that. The stock itself has been super fearful. Down at 29 recently, but moving up. Out of 100, it's now at 41. So that puts us right here at the top of the fear. At the top of the fear. Greed on the XLK, which is the sector, the technology sector, is in the greed value at 60. So this has been moving up right here. So less fearful, more greedy. Less fearful, more greedy. That's both of those are good. But going back to our sector breadth. Right, sector breadth peaked on April 29th. This is the same sector we talked about for Palantir. Now, why do you care if sector breadth peaked? This is why. 40% of your stock's move is due to the market. If the market is strong, that helps all stocks out there. We know this. So 40% is due to the market. 30% of your move is due to the sector. Okay, so everybody in the tech sector, you've got Apple, Microsoft, Meta, all those guys, all working together. 40% is due to the market, and 30% is due to the sector. And only the last 30% is the stock itself. Meaning, if you have the market working against you, and you have the sector working against you, you have 70% of the entire potential move of that stock working against you. That's like saying you're a basketball team, and 4 out of 5 of your players are sitting on the bench, and you think you got the most LeBron James guy on the team going out there, Like even a group of 9-year-olds is going to beat that guy. Just a fact. I don't know if a group of 9-year-olds can beat LeBron James. I don't know. I don't watch sports. But here's the deal. You have all this advance warning on the advanced money destroyer. Are you going to listen? Not, I mean, I'm not like actually asking you in particular. What I'm saying is you have the data in front of you. What are you going to do with it? You're going to listen? Or are you going to tell the market, I know what's better? Are you going to tell the market, hang on, are you going to be like Jeremy, the Joker, who recommends buying AMD before earnings? It can't go down. Listen, Jeremy was saying it can't go down for months at this point, right? Now, if it goes up, it went up. That's okay. But you need to look at it from a risk first perspective. Risk first, meaning getting out of the way before you walk into the casino, throw it all on black, and hope for the best, because that's kind of what you're doing. It's kind of what you're doing right here. So here's what I want you to do. We covered Palantir in depth. We covered AMD in depth. Put a couple stocks in the chat that we can look at together. I want to know if you're looking at it long or looking at short. So for example, AMD long, Palantir short, right? A couple examples. While you do that, let me introduce myself. Because I am just a random guy on the internet. But my name, once I find it, but my name is Christopher Ewell. I've twice been awarded top 100 people in finance. I was mentored by 5 of the market wizards, the best traders of all time. I've been successfully trading since 2009, and this is where outliers like us save time, make money, and start winning with less risk together as a team. So go ahead and subscribe if you haven't already. And I'm telling you right now, you definitely want to subscribe, because next week, this is happening.
Are you ready? Are you ready? Let's go! Let's go! Respect is earned. It's earned. Respect is never given.
So there you go. Next week, Tuesdays and Thursdays at this time, we will be having Outlier University. And as I just mentioned a minute ago, I was mentored by 5 of the market wizards. How about I mentor you? How about I mentor you? How about I be your Obi-Wan Kenobi to your Luke Skywalker? How about I be your oh gosh, who could I be? How about I be your Yoda to Luke Skywalker, right? I have Star Wars on the mind. I don't know. That's all I can think of. Let me help you. The way that you can do that is, number 1, subscribe. And number 2, show up Tuesdays and Thursdays, because Tuesdays and Thursdays, we have a group of 10 gentlemen. It's always gentlemen, right? Our audience is 90% men. We have a group of 10 gentlemen who will be joining us on the live stream. And for those gentlemen, I have reached out to you directly. We probably will have a meeting later this week to test all your equipment. That way we're ready to roll on Tuesday. And I'm going to mentor you directly online here, as if we're in the same room together. And then all of you can watch live. And then we're going to have about 10, 15 minutes at the end for your Q&A. Okay. So we're going to start at the very basics. So the first few episodes, you may be like, oh, this is so boring. I know what a stock is, right? But I want to make sure that I give you the very best education for free. I'm going to teach you everything I know for free. And if that isn't worth a subscribe, I don't know what else is. I don't know what else is. So let's go jump into our Discord for today's member highlight real quick. I love sharing your stories over in the Discord. We have a section called Share Your Big Wins. Where did that go? Share your big win. There it is. Share your big wins. I want to hear from you. How are you using Outlier, right? Deep Thought traded at Palantir position until 1 minute before the closing bell, sold it for a saucy 14% gain before the after hours carnage saw the share price plummet from 113 or to 113 from 124. Outlier makes it so easy to win. I didn't say that. Deep Thought said it, and I am not masquerading as Deep Thought. That is so good. Haunted Potato just sold his MSTU long call for an 80% gain. I've been holding out for a while because I didn't really have an exit. You didn't have an exit strategy? But Chris's lessons about dead money and stalling gains helped me realize now is a good time to get out. Yeah, dead money meaning nothing is happening. Especially if you're sitting on an 80% gain, bro, go take that somewhere else. A party van got a 15% intraday gain on PDD and the master key being unlocked. And Aussie Ian, I'm gonna spill the beans. Aussie Ian is one of our Outlier University students. I'm so stoked. And Aussie Ian was telling me this is the best time. I won't give his personal details, but Aussie Ian, first off, I'm so grateful. I'm grateful to you, my friend, that we can do this together. You have no idea how I'm really excited to do this with you. But the fact that it's the perfect time in your life just tells me that the Lord Jesus sent this down just for you, my friend. I'm so stoked. I'm so stoked for you. But another win following the Outlier trend template, closed BJ option position for a nice 14% gain in 3 days, followed the heat map rule, got in at the heat map of 55, gave it a 10-point spread. Today's analysis showed me it was a heat map of 66.52, had resistance at 120, got out at 119, followed the rules, and they are your guide. Let's go. Let's go. Congratulations, Aussie Ian. I'm so happy for you. Well, Aussie Ian's got a lot going on, so I'm almost a little bit choked up because I'm so stoked that we can do this for you, my friend. So be sure to share your stories in the Discord. And of course, the first rule of Outlier is you tell everybody. You tell everybody about Outlier, because Outlier University is going to change lives. It's going to change lives. So of course, hit the like button. Now let's get back to some of your stocks. Let's get back to some of your stocks. But real quick, what is Outlier and how does it work? Well, old Uncle Warren, who doesn't have a job anymore, he's unemployed. He's going to be collecting welfare. He used to say, before he decided to go rogue and like be homeless all of a sudden, I'm just joking. Be fearful when others are greedy, and greedy when others are fearful. Outlier shows you if investors are acting rationally fearful or greedy, and by how much. And I've shown you how it does that many, many times today, allowing you to get into the stock before the Outlier move happens. And if you're ready to save time, make money, and start winning with less risk, be sure to head over to outlier.com, pick up the annual pass for just 82 cents a day. Give me a freaking break. And if you're on the monthly pass, go ahead and save 64% by clicking that little red button. It'll help you out tremendously. Let's do this. Bender wants to look at Pain Pal. I love it. Pain Pal long. All right. So PYPL. Pain Pal long. All right. Looking at this, Pain Pal does have a buy signal. You got your 10, 20, 50 crossed up. That's what the green overlay is showing you right there, is that it's already in an uptrend, right? It's so easy to remember uptrends and downtrends. Your 10, 20, 50. Your 10 over your 20, price over your 50. Or your 10 under the 20, price under the 50. That's what the red ones represent. Now, when they're white, that means they're in betwixt those 2 points. So getting less fearful, moving up into greed, less fearful, moving up into greed. Now, of course, right here, this is the financials. Financials peaked. They went up from, let's see, 40%, 80%, 89%, and 88%. April 30th was the last day, in my opinion, to own Pain Pal. What's happened since then? April 30th was the last day, in my opinion, to own Pain Pal. Oh, that had PayPal in here. Let me add it real quick. PYPL. All right. April 30th was my opinion. And that's right there. Now, of course, it's gone up since that point, but that's okay. That's just for me. Now, if you're holding this right now, you got your 10, 20, 50 all across north. Everything's looking hunky-dory. But of course, that market breadth and the sector breadth are working against you. So keep that in mind, Bender. Keep that in mind. Let's see. Patrick wants to look at Cisco long. Patrick, how you doing, my friend? CSCO. While that loads, Incar is looking forward to university. I'm going to watch the Options Trading for Beginners Ultimate In-Depth Guide on YouTube after this and try to get my head around options. That is so good. In fact, I want everybody to go watch this. So what is this called? Options Trading for Beginners Project Finance, I guess that's the channel. Go watch this video. It's got 17 million views. I don't even try to make a video to keep up with this, because Chris Butler, who I've interviewed on my channel before, did a tremendous job. 3 hours of what options are. I want you to definitely go check that out. It's got 17 million views for a reason. Okay. If you want to learn about options, go read that or go watch that for sure. Okay. So Cisco, let's zoom in. We got a buy signal, 10, 20, 50 crossed up. So in a bullish trend right now, getting less fearful, more greedy. The tech sector, less fearful, more greedy, but less buy signals are coming through on the tech sector, right? This is the sector breadth for the tech sector. Let's see if anything else has popped through on the chart today. CSCO. Still looking sharp still, especially since it's bounced off the 50. Now, here's one of my all-time #1 favorite trades. Trading up into earnings, okay? We've seen this time and time again where something's leading up into earnings like Palantir did. And then, oh man, you can make so much money on this, right? Let's go to Palantir real quick. We'll come back to Cisco. In fact, let me remove all my drawings. There we go. Look at this. Running up into earnings, buy the rumor, sell the news. How many times did you hear me talk about that specifically on Palantir? You could potentially do the same on Cisco. Potentially. I'm not saying it's going to happen, but that is something I love to trade right up into earnings. So there you go. There you go. Outlier University needs a mascot. I think a monkey riding a donkey is the perfect mascot, or a monkey or a donkey, probably a monkey. I think Outlier University does need a mascot. Great idea. Great idea, Manny. So listen, if you're ready to save time, make money, and start winning with less risk, be sure you click on one of these 2 videos, and I'll see you tomorrow. We'll talk soon.